Let me get to talking then. Hold on.
No, I'm
Nah.
starting now. Bokama Sunday service. Today, primarily, we're going to talk about Walmart earnings and some of the inflation data that we got last week. Uh, with that being said, this is for informational purposes only. Investing and trading is risky, so do so at your own risk. I am not a financial professional. Please direct all of your trades and investment decisions to your financial professionals and do your own research. All right, guys. So today, let me share. Did I? I did. I opened up Thinkorswim. Can you see Thinkorswim, DeAndre, primarily? All right. So let's look at Walmart. Remember a couple weeks ago, they were on my top 20 list, right? Um, and they did well. And so, regardless of how they did on earnings, like it's one thing when we're talking about earnings, actually interpreting earnings yourself, which is what we'll do. But it's another thing in looking at how the market reacted to it, which is more important than the numbers they actually reported, is how did the market react to the earnings release. So we see here Walmart gapped up after earnings. It closed at around what 67.85 and then gapped up the next morning at like 73 and 15 cents approximately, right? So that's a pretty decent jump on earnings. It means that the street liked what Walmart reported. Once again, this is a safety stock in terms of if you zoom out, like Walmart doesn't tend to really have any major like moves back and forward. It's kind of like steady as she goes, right? It's hard to find. This is a month chart, right? It's hard to find as steady of a chart as we see here on Walmart, and that's why I like it. It's also like a bellwether for the economy. So, in addition to Walmart earnings actually being good, this was good for the stock market because Walmart is a huge component of, let's say, like the XLP, of like consumers staple stocks. So it's a bellwether for like how the economy is doing, because if Walmart's doing bad, it's a low price leader, it sells to everyone. If Walmart's doing bad, there's a good sign that like other companies, other stocks in the same consumer product sector are probably doing bad too. So the fact that Walmart is doing well, uh, people like that. The street like that, right? So let me go to, where's the internet? Yeah. So right. Oh, where are we at? Here we go. So I usually do this before every single week, looking at the stock market catalyst, right? So when we're specifically looking at what happened last week, because if you remember a week or two ago, maybe 2 or 3 weeks ago, everything was falling, right? Everyone was scared. We were correcting. We went down 15, 20% in certain sectors. And then everyone was like, oh, is this the next drop? Is the correction done? What are we seeing? And then, so Wednesday of last week, and why I think we're starting to see more market strength is because the inflation expectations number for the CPI year over year was 3%. It was 2.9%. And the inflation target for the Fed is 2%. Over the last like couple of years, this is as close as we've been to that 2% number. We finally got under 3%. So what that means is the street believes that the Fed is more and more likely to cut rates and potentially to cut them faster, or instead of doing like 5 basis point cuts, doing a 50 basis point cut. So maybe cutting a little bit larger, a little bit faster. And typically stocks do well in low interest rate environments. So that's one of the reasons. Then on Thursday, in addition to Walmart releasing its earnings and showing that it did pretty well, right? You had US retail sales. The expectation of growth was 0.3%, and we had 1% growth. So we had 3 times as much growth as what was expected. So one of the fears and one of the reasons why the market dropped is people had recession fears. Like maybe there's a recession around the corner. But with retail sales jumping the way that they did, that's not a sign that we're going into recession, right? So the street liked that as well. And then as a result, let's go to the NASDAQ futures. Right? If you see what we've had over the last week and a half, it's looking relatively positive from that drop that we did have, right? And we're still, just in terms of sentiment, and we're well above this 200-day moving average. We even climbed above this 50, the 34, and the 21 as well. So from an overall sentiment, we are still in a bull market from my assessment. That's the NAS. Let's look at the ES, another central component of the stock market. Same thing, right? Look how it reacted to the data releases last week. Almost similar. Let's go to the Dow. Very similar. A little bit not as strong as the NAS. We had a couple of down days and a little bit more volatility, but still, the pattern after the releases was pretty much up. And then the last sector, or the last component, not even a sector, is the Russell. The Russell has probably been the weakest, but you see we're still above that 200 moving average, still above the 50, the 34, the 21. Looks similar to the rest of the sectors. So this last week, we reacted relatively positive to all of the news that came out regarding inflation, earnings, U.S. retail numbers, etc. Right? So we are still in the bull market. So for those of y'all that picked up some NVIDIA when we all picked it up, right? And I'm just mad I didn't buy some more on this day. NVIDIA looks really good too, right? It's just the market looked really good over the last. Go ahead.
I also got a request too after you finish that statement about another stock I want you to check out.
Okay, right. But so like if you bought NVIDIA down here at 90, it was there for a quick second, man, you're golden right now. I bought mine, I think mine averaged out to like 106, something around this area, right? Which is when it broke out right there. So I'm still doing really well on my NVIDIA long-term position and where I bought it. I was just waiting for it to pull back from this high number. But, once it got close, it didn't even get to that 200. It got close to it and then pulled back up, and then that was it. So will NVIDIA ever dip again? Likely, but it's reporting earnings within the next week and a half. I believe it's, let me go look at it. So something to look out for in general. So you're talking about Monday of, I feel like it's on the 29th or the 30th.
I think the 30th.
No, it's the 28th. NVIDIA releases earnings in about a week and a half on the 28th. So this is going to be a big date for the market too. If you were not in NVIDIA long term and you were just trading NVIDIA, I would consider getting out before it reports earnings on the 28th, right? And it's reporting it after the market closes. So if you're holding it long term like me, then you're just going to kind of sit through earnings. And I expect NVIDIA to do well because some other chip stocks have, like AMD's earnings were pretty decent. And I assume NVIDIA's were probably better, given that when we saw Meta's earnings, Meta was talking about how much they were spending in the AI race. And when they're talking about their spend, they're talking about semiconductor chips. So who are they buying their chips from? NVIDIA. Same thing with Apple. Apple's earnings release, they were talking about they were spending more money to develop their AI the AI software components inside of the new iPhone release. Who are they spending money on? NVIDIA. Amazon, same thing. Google's making some of their own chips, but same thing. Everyone's buying NVIDIA chips. All of the biggest companies in the world right now are buying NVIDIA chips. Microsoft is buying more NVIDIA chips, investing more money so that they can run ChatGPT and a lot of other pieces of software that they own, and add in some AI components, right, and some AI features. That all involves NVIDIA chips. Cloud computing involves NVIDIA chips. Data centers, which is what all these massive companies are making a ton of money on. If you looked at prior or previous releases, all include NVIDIA chips, right? So I expect NVIDIA to do relatively well when they report earnings. I could be wrong, but if you're trading this, good idea to get out before earnings, especially if you bought it on that down day where it hit $92, or even on one of those days where it hit 100, 110. I know, Ange, you said you got in around 103, 104. So if you're trading it, just be careful taking it into earnings. It might dip again on earnings. But we'll see, right? And if you look at the market cap on NVIDIA, it's $3 trillion right now, which is crazy that it grew that fast, right? But essentially, this is almost going to be like the end of quarter two earnings. It's going to be the last mega cap company, one of the Mag 7s that's reporting after all of the other ones pretty much did. But it'll probably be like the end of like earnings season. You'll have a few other smaller stocks reporting, but this is going to be the last big one of quarter two, right? NVIDIA. So with that said, let's get to Walmart earnings and look at like how well they did and how well they didn't do, right? So, and this is the first time I'm looking at it. Usually I go through this before I talk to you guys, right? But we do Walmart earnings. What I typically do is just Google it. I just kind of want to show you my process. Google Walmart earnings. Then you can generally go and see from their last reporting period. They reported August 15th. What were the expectations? Their earnings per share expectation was 65 cents. They reported 67 cents. So that's a 3.76% surprise. Their revenue. Look how much revenue Walmart makes every month. Their expected revenue was $167.38 billion, and they beat that and reported $167.77 billion. A quarter, not a year, a quarter. That means Walmart makes like, what, $500, $600 billion a year in revenue, which is crazy. That's why it's such a huge bellwether for the economy in terms of how many stores they have. Walmart is usually one of the largest, if not the largest, employers in the U.S., right? They employ 2.1 million people. So as Walmart goes, the economy goes to a certain extent, right? So if you wanted to look at their specific earnings, go to type in their ticker, or you could type in Walmart Investor Relations. Go to their investor relations page, right? And they have some highlights here up for you showing their revenue growth, their ads business growth. Apparently, they're in the ads business, which makes sense because they're trying to compete with Amazon online now. And let me see if I can go look at the quarterly reports. And let's see if where can I find their here it is. All right, so if we're breaking down their actual numbers, and so right now we're talking about fundamental analysis, not the stock chart, not what the stock price is doing, but from a fundamental standpoint, is Walmart a good company to invest in, right? So if you're looking at their net sales for quarter two, and that's why I really want to look at. There's usually like a K, I think it's called a K10 or if you look at their sales though, that's Sam's Club. Let's go to Walmart net sales, right? So Walmart and Sam's Club are essentially the same thing. Sam's Club is their attempt to compete with Costco. Um, so if you're looking at last quarter, quarter two, their Walmart sales specifically were 110.9 billion, and this quarter is 115.3 billion. So there's some growth there, right? So Walmart is still growing. Their operating income or their profit was 6.1 billion the last quarter of quarter two, and this quarter is 6.6 billion, right? So you're still seeing some growth, which is why you see their stock chart is just such like a steady incline, right? There's not really a bunch of hyperbolic growth, but if you want to invest in something safe, Walmart is as safe of a bet as you can kind of make, right? So their international sales went up as well, 27.6 billion last quarter. This quarter, 29.6 billion, right? And you see a slight edge up in operating income too, which means that they're kind of maintaining their margins. Sam's Club, 21.8 billion last quarter. This quarter, 22.9 billion, right? Operating income slightly ticked up as well, right? So they're not killing earnings, but they're beating earnings. And how much more can you grow when you're making 168 billion dollars a quarter, right? The whole world, or at least the whole U.S., is already your customer. So, but the fact to see that they're still growing, they're either growing by continually increasing their sales numbers and or their margins at the same time, right? So just looking at their statements, the totality of their statements, right? So went from 160 billion last quarter to 167, or actually, if we're looking at total revenues, 161.6 billion to 169.3 billion. Operating income went up as we showed from the specific segments, right? Um, and let me see if we have. I always like to look at how much cash they have on hand too. So just looking at their current assets or receivables and cash and inventory, the cash they have on hand, they have 8.9 billion in cash, right? And in inventory and whatnot, there's total assets, but 8.8 billion in cash. And then looking at their debt, um, versus their total assets, right? Their total debt is 95.2 billion, but the assets they have is on hand is 254.4 billion, right? So it does have a lot of debt, but in comparison to the assets, it's nothing like really crazy, right? If you got 254.4 billion in assets and 95.2 billion in debt, that's a really good ratio, right? Walmart isn't going out of business anytime soon. Um, see anything else? That's really it. And I've already showed you the how the market reacted uh, to their earnings. So we got a company that's growing, a massive company that's still growing. Um, it appears that they have a decent amount of cash on hand and assets relative to their debt. It seems that, Walmart is still positioned relatively well. I would like to see them break down their online sales, which they don't seem to do, because that's kind of where I want to see Walmart growing. I know just because my wife from our business, she orders some things from Walmart, and I know that their online sales are getting better. Like they're finally figuring out a way to go from brick and mortar and actually get more and more people either to like order online and ship, order online and get groceries. And so I'm actually wondering of these like net sales, like it says e-commerce contribution. I'm wondering how much of this is online and how much is that growing? Because if they can grow and take some of Amazon's market share, then I think Walmart has another lane to kind of run in as well, right? Where it could still keep growing in the future, growing its in-person store sales. Them adding groceries was an excellent move a while back. So I think their in-store sales are going to keep growing, but also can they get their e-commerce or online sales to grow to where they can really start competing more with Amazon? Amazon's the behemoth, but can Walmart start like grabbing some of that market share since they sell much of everything anyway, just like Amazon does? All right, so that's Walmart earnings. And the street reacted positively to it. In addition to the retail sales numbers coming out and looking really good too, retail sales were strong in the country in general. So if retail sales are strong, then Walmart is likely going to continue to stay strong as well. I would say the same thing for Costco, which is why you guys know I bought some Costco in my long-term portfolio a few weeks back as well. All right. All right, let's get to some stocks. What do you want to look at, DeAndre?
Check out ACC.
Y'all always be coming up with these stocks that I don't know nothing about. Is it an ETF or a stock?
It's a stock. It's called Accolade.
What does it do?
I believe it's in health and technology.
Are you sure this is saying
share price?
This is saying American Campus Communities Inc.
Let me check and see. Give me a second.
The chart is decent though, I have to say. It's going up the right direction.
Yeah, it was at $15 a share, and then it dropped to $4 because they made some changes. It's ACCD. There you go.
Oh, okay. We're looking at the wrong
ACCD.
Oh no, I don't like it. I'm telling you right away, I don't like it. Look at the trend. And versus
it was $15, dropped to $4, but they're doing some restructuring with the company. But I wanted to look at the earnings report to see if it is a good time to buy, because I ran into an employee.
I would say no, because this company, look how cheap it is. It looks like it's going to go bankrupt if you look at the chart. If you go from 65 to $3.35 now at 4.15, like what's that? That's like a 80-90% drop. If it goes to zero, remember, companies can go to zero. That means they go bankrupt. So if the company goes to zero, you lose all of your money. And so for me, like I kind of go, for me, I do this backwards. I look at the stock price first and the chart first, then I'll go look at the earnings to see if they're worth buying, right? So just looking at the chart,
okay,
I wouldn't even want to go look at the earnings. Why? They're clearly terrible, because if they weren't terrible, the stock price wouldn't have went from $65 all the way down to $3.35. Sometimes you have
to just got acquired by another company.
Yeah, well, if they just got acquired, and that chances are they're probably going to stop trading this thing soon anyway, and there's going to be some deal for whoever acquires it, where whoever owns shares in this are going to own shares in that new company that acquired it, whatever that deal was, whether it was in cash or in stock, in terms of the acquisition. But I would say first look at the ticker, and then go look at the earnings to see if fundamentally this is a good company. And number two, are you trying to invest in this long term or trade it? The only time I look at fundamentals is when I'm trying to invest in a company. If I'm trading a company over a short period of time, I don't care about the fundamentals. because I'm not going to be in that stock for a year or 5 years or 10 years, right? I just care about the stock price
Yeah.
and the floors or the supports and the resistance levels in that stock price if I'm just trading it. If I want something long term, yes, then I'm going to look at how strong is this company? How much cash does it have on hand? How does it look in comparison to the other stocks in its sector that are competing with it? Those are the things that I'm going to be looking at, you know? So, but fundamentally looking at this ticker, I'm just showing you it looks bad, right? If you invested 5 years ago, you would have lost most of your money. Versus
Okay.
like and then you should always be look for investments. If you're talking about like invest in Michael Jordan and Kobe Bryant, you know, don't invest in Smush Parker, you know. Don't invest in not to hate on Smush Parker, but don't invest in
Good
Kwame
take on
Brown.
them. Look bad.
Don't invest in This looks like Kwame Brown. You know, everybody thought he was gonna be dope as a rookie, and then now he's here. You know, don't invest in Kwame Brown. Invest in the top two in a particular sector. So, what does Microsoft look like? Invest in Microsoft. Microsoft had a pullback. You should have invested in Microsoft when it pulled back here. You should have invested in Nvidia when it pulled back here. Look at that chart. Look at AMD, which isn't really on my list, but that chart looks a lot better than ACCD, ASML, TSM. Just charts that look
So
way.
you would even look at
Go
so
ahead.
you would even look at the earnings on this one, huh?
Unless the chart looks like it's decent, right? Even
Gotcha.
like Disney
Okay.
looks really bad right now. Remember, I cut Disney. I was into Disney at one point when I thought it was coming up here and pulled back. Grabbed it here. It kept going down. So, no, I'm not a fan of buying Disney right now. Look at the chart. The chart looks ugly. I don't want to buy ugly charts, right? If you invested in Disney 5 years, you lost money. You lost half of your money. So, look at the chart first. Like, I want to at least see something that looks like this, which is when I was investing in Disney. I want to see a run, a bounce that looks like this, and then a pullback before I take that up. But if it's still in the depths, like this, it looks like it keeps making. This is what I wanted to explain to you about technical analysis too. If you keep seeing lower lows, that is a bad thing. You want to see higher highs and higher lows. So we had a low here. Then we had a low that
Yeah.
was lower. That's not good. You want to see a high, then a high. Right here we have a high and then we have a lower high. That's bad. You want to see a stock that looks like, okay, it comes back and then keeps pushing up. It comes back and then keeps pushing up. It comes back and then keeps pushing up. That's a good looking stock. That is a healthy looking stock. A stock that keeps pushing lower, like the reason why I like Disney here again too, that was the most recent high when we were here. And then it gave us a new low, right? And then we reached a higher high. So I was like, oh, maybe the momentum is finally turning because we reached a higher high. So that was a reason for me to potentially get in because it looked like the momentum was turning. Then we came back down. And look, at least on Disney, we still haven't made a lower low from here, right? So if I were to try to get in Disney again, I want to see it hold that 78.73. If it doesn't hold that 78.73, I would cut it if I were in Disney again or decided to get in at like $80, right? That would be my price at Disney potentially if I were to swing this thing. I don't really want it in my long-term portfolio right now, but if I were to swing it, I try to buy it at like $81, $82, and I'd keep a stop under 78.73 because if it makes another low, that technically is bad for the stock. What I wanted to do is come back up here and break this high. If it breaks this high again, then hey, Disney's momentum is going up because we're getting higher highs and we're not getting lower lows. So anything you see making lower lows, do you see technically what I mean by a lower low? So if we were to draw these
Yeah,
lows
I do.
right here during this section of this stock in this period, these are lower lows. So we're going down and we're getting lower highs if you're drawing the highs, right? That means the trend of this stock is negative, at least during this zone. Then right here, we had some higher highs and we had some higher lows. That means right there, the trend turned around and went positive. And now what do we have again? We have lower highs and lower lows. So the trend is negative again. Right? I just wanted to show you guys an example. So like this is some very basic charting, but this is how I would chart to see if we're having a downtrend, or here we have more of a sideways trend, right? You can have a sideways trend too, where for this period of time, we were sideways, bouncing back between these levels. So that book, I don't know if I've told you guys about it. It's an old book. I think his name is either Stan Weinstein or Seth Weinstein, but it's about technical analysis. And he essentially breaks down like a phase of a stock into like four different phases. Like, right? Like, are you basing up? That would be like a one, and then going up would be a two. Uh, Kind of this little consolidation period, which was very short at this top, would be like a three. And then on the way down right here or on the way down here would be a four, right? So just kind of recognize the stages that a stock is in, right? So you really need to understand, like, is this something that is headed in the wrong direction? Because trends tend to continue more than not. Yes, trends can reverse, but they tend to continue. So something that is going up is likely to keep going up. Something that is going down is likely to keep going down. What you're generally looking for is something that goes sideways. If something is going down, you want to see it go sideways before it makes that next move down or that next move up, right? So just because that's consolidation, the buyers are fighting down here, the sellers are fighting up here, right? So you're looking for a period of consolidation, and then generally the stock is safer to enter on a period of consolidation versus catching a falling knife when it's just coming straight down. And you see the trend is coming down and it's not breaking at all, right? So looking at ACCD one more time, we we draw the highs together. What does that trend say? You draw all the lows together. I can't even really draw the lows. The lows are down here, right? It's trending down. We are, and here, let's say you had some consolidation, right? Here, up here. So if I'm swinging this thing, I try to buy it around $3.35 and I try to sell it around $15 every single time. But long term, I wouldn't put this in my retirement account. You feel what I mean by that and why I'm saying that?
I get it.
Right.
I do get it. It is
So
going sideways right now, but nonetheless, just for the drop off in that short amount of time, I do.
even if it's going sideways, still like this looks like a swing trade to me. It doesn't look like a long term investment. I would swing this from 335 up to 15, but that's it. Then I'm selling it. I'm not expecting it to go higher than this candle right here. Right? Price is telling me every time it hits the top of this candle, it keeps falling. So
But you would possibly day trade it though.
I wouldn't day trade this either because I assume that it's probably not liquid. Look at the the options are It barely has any. It has monthly options, and the options are liquid. So I wouldn't even day trade this either. There are better things out there that are probably more stable than this for me to day trade. So I wouldn't. I and if we're talking about day trades, so let's go back to KoiFin, which is a tool, free tool. At least this version of it is free. Um, what I'm looking at the day trade depends on what's trending recently. Right, I'm looking for a pullback on what's trending recently. If we look at over the last month, you got XLU, XLP, consumer staples, right? And what are the consumer staples? I've been talking about this. It's been Procter and Gamble. Let's look at that again. So Procter and Gamble. Look at the last. Yeah, Procter and Gamble's been like so-so. Bad example. That's the head of the XLP, but what else is in XLP? Coca-Cola. I did really well on my trade there the last couple of weeks. Coca-Cola is something I'm looking for a pullback on. Colgate, something I'm looking for a pullback on. Walmart, we just talked about that. Something I'm looking for a pullback on. Costco, even though I bought that, right? That's been looking pretty good in terms of day trading. That's something that I'm looking for a pullback on because it's in the XLP sector. XLU itself has been hot. I'm looking for a pullback on that. You look at all these green candles, the momentum is up. I'm looking for one of these red candles. If you would have invested in XLU, I think this is probably the day I grabbed it too. If you would have invested in XLU on that day, you would have had a decent trade up, right? So I'm looking for something that is strong. This has been relatively strong over the last couple of months. And I'm waiting for a day like this or like this to grab it on a pullback when it's exhausted and then heading right back up in the same direction because the trend is still up. If you look at these moving averages, they're still moving upwards, right? So XLU was strong. What else was strong? I am kind of wary though because tech had a big comeback last week. So these are more safety stocks. So if tech comes roaring back like it did last week, then people are probably going to start selling off their safety stuff. But if tech has another pullback or is sideways, then I would expect some of the safety stuff to keep doing relatively well, like healthcare too. XLV has been doing relatively well, KRE and the financials. So my day trades next week or my swing trades, I'm going to be looking at XLP. I'm going to be looking at XLU. I'm going to be looking at KRE to bounce back or to pull back a little bit, maybe down to around this level where these candles are here. I'm going to be like, what else? That's XLV, but XLV is not usually liquid, but look at how it's done, right? It looks like it's heading in the right direction. The names that are big in XLV are going to be Johnson & Johnson, Eli Lilly, right? That did pretty well. Those are the names, AbbVie. I'm going to be looking at AbbVie. How's UNH doing? UNH is doing pretty well. Those are the names that I'm going to be looking at swing trading or day trading next week because their sectors have been trending over the last month. I'm waiting for a pullback in those sectors. The other one, I said XLF. The banks have been screwy lately, though, so I've been staying away from banks. But look at the sector, over the last week or two. JP Morgan, Wells Fargo. Wells Fargo must have had some bad earnings, but it looks like it's coming back. BAC, after Warren Buffett sold a lot of profit or a lot of shares of this, that looks like it's kind of coming back. Citi, same thing. They all kind of look alike if you're looking at the sectors. Those are the things that I'm looking at day trading and swinging. And the only reason I'm looking at day trading and swinging them is not because of the fundamentals. It's because recently, if you look at the entire sector, those are the sectors over the last month that have been up. So I want to be where the strength is. At least from like a day trading, I'm not going to be in that trade for longer than 24 hours, right? So I'm looking for what's been strong lately and what's pulling back. So where it's a decent deal over the last week or so. But I'm not going to be going into AbbVie's financials. I don't plan to have AbbVie in my long term portfolio. So I'm not looking at its fundamentals. I'm only going to be looking at the stock price, right? Because I don't plan on being in that trade for longer than a couple of weeks if I'm swinging it, 2 or 3 weeks max. I'm going to be inside of an AbbVie or a J&J. So what do I care what it looks like from a fundamental standpoint? I want to see what the sector is doing. This is the tide. If the tide in utilities is going up, it's going to raise all the boats inside of that tide. If the tide in consumer staples are going up, it's going to raise all of the boats inside of that tide. The tide in healthcare is going up. All healthcare stocks, not all of them, most of them are likely to go up. So those are going to be the places that I'm going to find trends. Then I'm going to try and find the strongest names inside of these trending sectors. So I just showed you the XLP names. The strongest name that I just saw in there was Coca-Cola. I just exited a trade in Coca-Cola that made me like $1,500 over 2 weeks, right? Doing a swing. But if it pulls back again, I might hop back in. The only reason I exited that Coca-Cola trade is because my options were expiring on August 16th. So if it gives me another pullback this week, I might hop in another time for a swing. So looking at my trading watch list, not my investment watch list, to be in contrast with my trading watch list, my trading watch list for this week are going to be those names that I just gave you: Coca-Cola, Walmart, AbbVie. What else did we see? Colgate, that was pretty strong. The XLU itself. I don't usually like to trade things inside of XLU. I'll trade the ETF itself. Um, XLP sometimes, if it's liquid, the options are liquid, I'll trade that itself. XLV usually isn't that liquid, so I'll try to grab like a J&J or a AbbVie. KRE is usually pretty liquid, the regional banks. I'll try to trade that itself. And the financials, JP Morgan looked like the most stable, so I'd be looking for a pullback in JP Morgan. And then the main thing that I'm going to do is, because I know the sectors that I'm interested in, I'm going to look for a day where if I go into Thinkorswim and I have my sectors over here, if I see KRE is red one day, that's probably going to be my target for a swing on it. If I see XLP, where is the XLP at? If I see XLP is red one day and has a big red candle, that's going to be my day to try and grab it when it's exhausted. Because yes, it had a bad day, but the sector is trending overall. So I'm still in the strength. So I want to catch it when it falls on a bad day and then swing it back up to where it just fell from, right? So that's what I'm looking for. If XLU has a down day next week, KRE has a down day next week, XLP has a down day next week, and XOV, but not XOV itself, the names inside of XOV, if those have down days, then I'm going to either be looking at the ETF itself or the names within it and see what's pulled back and what's likely to keep going forward if it's already in the trend. Just because something has one bad day doesn't mean that the trend is over. It usually takes several bad days to like stop a trend. So if over the last couple of weeks, over the last month, something has been trending like Coca-Cola, come on computer, like this is strong. Look at the last like couple of months of Coca-Cola. So we have one down day. I'm almost certain that I got into Coke on this day. It had 1 or 2 bad days. That was the day that I got in, and then I got all of this momentum heading back. Just because it has 1 or 2 bad days doesn't mean that the trend is over. It's just pulling back. And I want to get a really good trending stock on a pullback for a swing up, right? At least my swing trading. Even on my day trading, I'm looking at 5-minute charts, so I'm not as even concerned about. I'm not as concerned about the long term nature. I'm not going to say long term, the weekly nature of a stock for a day trade, but when I'm swinging something, that's what I'm looking for. Hey, is something that is strong over the last month having a bad day or two? That's when I want to come in and grab it, because just because it had a bad day or two doesn't mean that it's not going to keep going up in the same direction that it's been heading up over the last month or two, right? Anybody want to look at anything else? But and does what I just said does what I just said make
Yep,
sense?
does make sense. Let's look at ABC.
What is that? You
Wait,
go ahead.
wait, before we hop off that, so you went in and bought call options for Coke?
Yes, because sometimes the spread, like if I do a spread on certain stocks, it's not liquid. Or if I'm more confident in the trend of a particular stock, like Coca-Cola specifically, had a really strong trend. Look at the trend since April, mid-April.
Yeah.
Coca-Cola's been really strong. It's been continuously going up. So I really like the trend on Coca-Cola. So if I really like the trend, I might not try to do a spread. I might not do sell a put spread, because the difference between buying calls and selling a put spread is the amount of upside. You get way more upside in buying calls versus selling spreads. When you sell spreads, you have a defined risk, right? So if the spread or if I sold a spread for $500, and that's, let's say that's five contracts, or five spreads for $500, the most that I can make is $500. If I
Hmm.
buy a couple of calls, my upside is unlimited if the stock keeps going up. So
Yeah.
you get it's more risk. I would say it's riskier to buy calls because of the time decay associated with buying calls and buying options, but your upside is greater. So if I'm more
Yeah.
confident, or the other side of the option chain is not liquid for the spreads, which means it's going to be more difficult for me to get out of my spread, then I'll buy calls, or I'll buy puts if I'm shorting something, you know. So yes, on that one I bought calls. So
Okay.
so let's say
What
if
was
Coke were to pull
the
back again, I
your expiration on that play?
what's up?
What was your strike price and expiration date on that play, on that
Uh
trade?
I don't remember. I know my expiration date was August 16th, because that's the reason why I had to get out of that trade earlier. It's because the time decay starts getting worse as we get closer to expiration. So I got out, um, and I know my expiration date was August 16th. I don't recall my strike price. Chances are, if I got in on this day, my strike price is probably around $64, because that was around the low, and I usually get something right around at the money or slightly in the money. So chances are my strike price is probably 64, $65. Just knowing how I trade,
Got it.
right? So, but if I'm looking to get into Coke, I don't want this Friday. I would like for a longer term swing if it were to dip, and I'm going to be looking for something either August 30th or September 6th, but I'm looking for liquidity. So I'd be looking at this 65 strike if it can drop that low, or let's say where's the chart? Chances are it'll be back in like pullback territory if it gets to like 68, 67, 75. So I would be looking for a strike that's above. I'd probably be looking at the 65 strike if I'm taking the September 6th um, expiration, because there's more liquidity there. I don't like how far the spreads are apart, but as we get closer to that price, well, as we get closer to $67, the spread shouldn't be as wide. They should shorten, or take the August 30th, which is about 2 weeks away. And what I say, 67. I don't like any of these, because the open interest is really low, and I don't like being out of the money. So chances are, if I were to find something on Coke, I would take the September 6th strike, and I'd be taking these 65s right here.
Nice, good game.
Right? Do you see why I'm saying that? Like why I'm taking that date versus the other? And the further you go out, if you're just buying calls, the time decay is going to affect you less. So it's 0.04 here. It should be higher. It's probably because the market is closed right now. You'll see time decay is going to decay the value of this option faster if you're in a shorter expiration like August 23rd. But if you go 2 or 3 weeks out, it also buys you more time for this option to do what you want it to do, or for the stock price to do what you want it to do. But I'd be more likely to take this strike because there's more liquidity here. And then this also tells me too, like, where's all the size, right? All of the size is more on this side than this side. So that tells me 65 and like 69 are probably going to be like the range that people are expecting the stock to be in by September 6th. So a good place to buy this would be $65 too. If it drops down here, of course, that would be even better. Just telling me how people are betting. That's over like the next 3 weeks. But let's say if you had a shorter expiration, just looking at the size, here, there's some decent size here, but there's more size on the call side. So $68 is where all of the open interest is parked. Even here on the call side. And where's the next biggest size? Maybe like 70, because that's not even that huge. So people are probably expecting Coca-Cola to stay within, say here there's a little bit of size here, like $66 and $68, right? So yeah, this would be a really good pullback if you can get it around $66. Apparently I have a alert there. And it's crazy. I'm looking at this again, but apparently I have an alert there, probably because this is what I've done before. So if it pulls back to $66, I really like a buy on Coke there. But this is more probably of a day trade. But I'm just looking at the size. That's where people expect the range of this stock to be over the next week or so, right? You got a decent amount of size. I'm looking for edges, right? It looks like $68 is where people really think it's going to go, because that's where all the size is. So if you can get this around 68, like right there, that might be a good place to get it on a pullback, because there's huge size there on both sides, on the put side and on the call side. Right, so price is going to gravitate to where all the size is. So just another thing to kind of look at. But generally, like I said, I'm going to be trading things that are 2 or 3 weeks out, so that time decay doesn't hurt me as much. And then if you look at, like, if I wanted to do a spread on this one, instead of buying calls, I could sell a put spread. But look, there's no liquidity. And then when you're selling a put spread, you're selling a put and you're buying one. But if you're doing that, you're essentially selling an option and you're buying an option, and vice versa when you're getting out of the trade. But if there aren't a ton of people to trade with you, it's going to be hard for you to get out of that trade. So this is a case where I wouldn't buy a spread for 2 reasons: because I like the trend on Coke, so I want more upside. And then number 2, there's no liquidity. If I were to sell a put and buy a put, there's very little liquidity just here at this strike price here, but all of these other strike prices aren't that liquid. So it's going to be hard for me to get out of a spread, even if it goes in my direction, right? So that's why I wouldn't take a spread on Coke, at least as the option chart currently looks right now, All right, any more questions?
Yeah, real quick. What are your red dotted lines and green dotted lines?
Those are ATRs that I had ChatGPT write me a code for. So
I think we talked about that like maybe a couple months ago, right?
yeah, for me, like that's like extra confirmation that something is exhausted. Like if you see here when it hits it, it almost invariably goes in the other direction. Even here, it hit it here, went back up. Hit it here, went down. So for me, that's like extra confirmation for me to get into a trade. I'm gonna feel more confident. Like right here, if I would have bought this right down there, look, as soon as it touched it, bounced right back up. A lot of times it doesn't get there right here. It hit it, wicked a little above it, but then it came right back down. You know, it's looking at the historical price data of this stock over the last, I think 5 to 10. No, I did the last 10 trading days, so the last 2 weeks before, and then it measures what the volatility is. How much over the last 2 trading weeks does it go up? How much does it tend to go down? And then draw me levels. And as you see, if it ever gets there, for me, that's extra confirmation to short it. Or in Coca-Cola's case, I probably wouldn't short it because it's been in a long-term uptrend. I'm looking for it when it hits that green line. So if I'd have bought it right there, really good trade. You know,
Buy it, wait for it to shoot up.
Yep, buy it right there, really good trade. Doesn't do it all the time, but if it does hit it, it's a good chance that it's exhausted because it's already gone past the historical volatility range over the last couple of weeks from a mathematical standpoint, right? So I went to ChatGPT and had it code it for me. So if I see it on the daily chart getting close there, and we have like oversold or overbought conditions, it's more likely that this thing is going to go up or down if it hits that range, right? Soon.
Yeah.
So yeah, I like having that on my chart because if it lines up like with like this is like if it lines up with a moving average too, you know, they tend to bounce. Like look at Coca-Cola, it's been bouncing off that 50. So if I can get that ATR to be kind of similar, or it's that 50, and then it hits the ATR, that's like a double confirmation for me to take this to the upside. So for me, I'm looking for like not just one thing to be true, but if 1, 2, 3, 4 things are true, then that trade is more likely to go in my direction. So Coca-Cola, if I'm looking at the chart, this day chart, is bouncing at the 50 consistently, right? So do I have it near the 50? Did it hit an ATR? And is the entire sector XLP going up at the same time, right? And I know XLP is a bigger component in the Dow. So if the Dow is going up, the XLP is going up. I have this at the 50 and I have it at the ATR. That's like extra confirmation for me. Like, hey, I'm going to be way more confident in that trade than something else. And we're just talking about probabilities. If the whole ocean, the Dow, which has a lot of the consumer staples in it, more so than the Nas, is heading up, then Coca-Cola is more likely to head up. If XLP, which is the consumer staples sector inside of the Dow, is headed up, Coca-Cola is more likely to go up. If it's more exhausted and at a moving average that it tends to bounce off of, Coca-Cola is more likely to go up. I'm going to be way more confident buying it on this day than on any other day if all of those 4 things are true. Right? And that's just not really giving you like a trading strategy, but just like confirmation. So that probability of that trade working out is going to be a lot higher than another trade where, let's say, Coca-Cola is down here, but XLP is down 2% that day. The Dow is down 2% that day. Now Coca-Cola is going to have to fight its sector and the index to go up. Now it could win, but that's a lower probability trade. You're fighting against the tide in the ocean.
Love it.
Yeah. Or let's say the Dow is up, XLP is up, but Coca-Cola is at this red range where it looks like it's overextended to the top. Do I think it's going to keep going past that? No, that's probably not a good place to enter the trade because it's
Mm-hmm.
already exhausted to the upside and everything's already up. So it's already made the move. I'm not going to get into a trade after the move is already made. I want to get on the train before it leaves the station, not chase after the trade.
Mm-hmm.
Right. So that's all I'm saying from a swing perspective. Like those are the things that I'm looking for to get confirmation that this trade is going to be a higher probability. And now this thing could still drop, and I could be wrong, but that's okay. I just want to take higher probability trades. Higher probability
Exactly.
doesn't mean zero risk; it means less risk.
Hey Trey, what was the stock that you wanted to look into?
ADC.
What is this? Is that one of the stores I saw that in Hawaii? No, Amerisource.
Stores?
It's a ADC. Alarm.com.
A what? D?
A D is in Delta. C.
Yeah, you thinking of the ABC store,
Yeah,
Mo?
if you've been to Hawaii. um, no, I don't like it. It's, for a swing, yeah, it's been trending good, pretty well. It's been trending. Oh, it's a REIT. Um, you know what? Let me. So if we go back to Koifan, I've been taking. Real estate has been one of the hotter sectors. So I don't like it from a long term standpoint unless you're into dividends, essentially. I would imagine because it's a REIT, the primary reason that people are. You guys know what a REIT is?
Oh,
No. Isn't that where like a whole bunch of stock portfolios for real estate?
Real Estate Investment
Something on
Trust.
those
The prime
real estate
REIT.
investment trusts.
The reason why people buy REITs typically is for the dividend. REITs typically give you higher dividends. So I don't know what ADC's dividend is, but chances are that's the reason why people are buying it is and it's probably in a certain sector. So the one that I used to invest in was EQR. They do a lot of luxury residential properties. I think I used to do AMT, which is the cell phone towers, and DLR, which is data centers, and then Prologis, PLD, which is the warehouses. But these are pretty much companies where if you're investing in, you want to invest in real estate without actually buying houses, this is the way to do it. If you think real estate's going up, the real estate market is heading up, and this might be a good time because we know that interest rates are about to get cut. And when interest rates are going to get cut, there's going to be more houses that come on the market. There's going to be more activity in the real estate sector in terms of refinances and people moving out of the house that they've been wanting to move at, but they want to keep their current interest rate. So Agree Realty Corp looks like a REIT. It probably has a decent dividend because that's the reason why most people invest. It's annual dividend of $3. Dividend yield is 4.17%, which is decent because most growth stocks don't have anything near that. So if you're investing in that, you're primarily investing in it because it pays dividends. I'm just interested in what they actually buy. What type of real estate are they in? ADC, what's it called? Agree Realty Corp. It mostly invests, it looks like, in retail properties.
Oh,
So, retail is
okay.
better than commercial, but it looks like it's primarily leasing to retailers. So, if you look at some of the stuff they have, it looks like Golden Corrals, and let's look at their properties. Right? And so, we're talking about fundamentals. This is what I would be doing if I'm trying to figure out like, hey, fundamentally, like, what does this company do? Go figure out what it does. Go look at its webpage. What does it say that it's primarily doing? You know? So look, it looks like it develops auto zones and things of that nature, right? Costco, the place that Costco rents, right? It looks like that's what its primary thing is investing in retail operations. So a place like it might buy the building that Costco moves into, buy the building that AutoZone moves into, and leases it to them, right? It looks like that's the primary. Not that I've done a ton of research on this, just the 5 minutes of us looking at this. That's what it looks like it does, and primarily, like, this isn't a growth stock. This is something, a safe place to put your money, and every quarter or every year you're going to get a dividend. And, you know, if you buy per share, it's going to give you $3 a share every year, you know. So if you buy 100 shares, it's going to give you $300. If you buy 1,000 shares, it's going to give you $3,000. And then you're hoping that the stock price goes up too, so you get some appreciation. If you almost
What's
think
the
of
price
this,
of the stock right now?
it's at 71.38. If you almost think of it like a house too, like Ange, imagine you bought your house here for $53, and your dividend is your cash flow every single month or every single year. And if you bought it at $53 and today your house appreciated to $73 or $72, and you're still getting cash flow from it every month.
Yep.
So that's how I would look at dividend stocks or REIT stocks in general. Look at it like a house. You don't want to buy a house right here up here for $75 and then sell it for $53. You lose money, even if you were making cash throughout this time, right?
Mm-hmm.
You would ideally want to buy a house low,
Yeah.
have the cash flow, and then at some point in time, if you decide to sell it for more than you bought the house for. And over this period, you've been collecting the cash flow from the house. So that's the main reason people invested REITs. I just gave you some that I've invested in the past: EQR, luxury retail, or no, not luxury residential, DLR, data warehouses. This, when crypto was big, a lot of people were investing in this because they were essentially housing all of the chips to run or to mine crypto. AMT, cell phone towers, PLR. No, what's Prologis? PLD. Those are the main ones that I know about. Prologis warehouse, especially during COVID when there was a lack of warehouse space, this stock was booming. Like during this period. But yeah, REITs. Anything else before we end, gents?
I'm out of here. But yeah.
Yeah. No,
Another good
man.
one, man. Thank you for go ahead, Angelo.
I think I was just going to reiterate what you were saying.
Okay.
Thank you. You appreciate the game.
All right.
It was
Yeah,
good,
man.
Thank you
I
for
think
giving some insight.
these are really helpful, man. You know, good start to the Sunday. Get you up, get you productive, get your mind thinking. So appreciate it as always, man.
Yeah, more than anything, man, I'm just trying to educate. Like, more than giving y'all strategies, just like how to read the market in general, you know? Because I feel like there's not enough people that are just showing people how to read the market. You know, what is the market doing? What isn't it doing? But yeah, next Sunday, 8 a.m., Mokama Sunday service, making it rain without the umbrellas.
Yeah, man.
Have a good week.
Have a good week.
Yeah.
Appreciate you. Peace.
Yeah.
All right, gentlemen.